welcome to On the Money here on WDBO AM 580, always streaming live inside your WDBO app. This is your chance to, get a little help. Get a little help, some experts in the retirement world helping you get to and through retirement. We got Joe Bert and Matt Murphy standing by with the Certified Financial Group, a couple of certified financial planners with the Certified Financial Group, and they have been doing so for the better part of 4 decades here on WDBO. Recognized by all kinds of magazines and national, local accolades, Certified Financial Group has been helping the WDBO listeners just have a little bit of peace of mind when it comes to those golden years. And I invite you to join the team here on the air. 844-580-9326 is the number to call. Matt, Joe, how are we doing today?
Good morning.
Doing great,
Good morning,
Josh.
Good to be with you. As you said in your intro there, Matt and I are here to take calls from our listeners, things that might be on your mind regarding your personal finances. Monday through Friday, Matt and I and the 15 other certified financial planners work with our clients as fiduciaries, providing retirement planning and wealth management for a fee. But on a Saturday morning, we are here for you absolutely free. So if you have anything on your mind, questions you've been thinking about, decisions that you're trying to make regarding your personal finances, whether it's regarding insurance, whether it's got a mutual fund, an ETF, your 401k, an IRA, long-term health care, reverse mortgages, all those things that Matt and I deal with, see every day, day in and day out, working with our clients, we are here for you absolutely free. And the good news for you is the lines are absolutely wide open. So if you have any questions and anything on your mind, once again, the lines are open and the numbers are
844-580-9326, 844-580-WDBO, or you can send in your open mic using that free WDBO app. The topic of today's show is doing well by doing good, savvy, charitable, and gifting ideas.
Joe, one of the things I hear from clients a lot, in particular, I'm not sure why, but recently, is a lot of confusion and questions around gifting, whether it's to friends and family or to charities. So I thought we'd take a few minutes this morning and talk about some of the parameters and some of the rules and consequences of gifting to both friends and family and to charities.
Let's do it.
And, maybe clear up some confusion. I bet, Joe, some of these things that I'm going to mention, you hear often as well. And the most common one is kind of this annual limit that you can gift, and it usually comes up in the conversation of, hey, I want to gift my kids or my grandkids some money. And I had actually 2 calls on that this week. So I thought we'd clear up some of the confusion around that. So the tax code allows for us to gift up to, in 2024, $18,000 per year, and that's called the annual gift exclusion amount.
And that's per individual.
That's right. Good point, Joe. To take that a little bit further. So, for example, if you're married, let's say you're married and you have a child, both you and your spouse could gift $18,000 each to that child under this annual gift exclusion amount.
And it doesn't have to be a child.
It could be anybody.
It could be your neighbors.
Exactly.
It could be a couple of guys on the radio on Saturday morning.
It sure could, couldn't it?
All right.
So it's a good point. It's not limited. It's not limited to anybody, for that matter. So
the misconception that I see occasionally is some people think the gift, when you make that gift, it becomes tax deductible.
Yep, exactly. Or for that matter, that it's maybe even taxable to one of the parties.
It's going to be income to the kids or whoever you give the money to.
Joe, that's on point. That's exactly what I wanted to cover this morning.
Am I reading your notes here this morning?
No, you're reading my mind, though.
All right, there you go.
So that $18,000, it doesn't mean that if you were to gift, in excess of that $18,000, that somehow it's going to be taxable to either you or to the recipient. What it means is the tax code allows for a lifetime, and we're going to get a little technical here, but a lifetime exemption amount with gifting. And right now, that number is at a staggering $13.61 million. So what that means is over the course of your lifetime, you can gift up to $13.61 million without incurring any gift tax. Now, that's also, not to get too technical, but that's also in combination with the estate tax. So you can do a combination of gifting up to $13.61 million and or passing to somebody else at your death via your estate up to $13.61 million. So just going back to the $18,000 per year, as long as you don't gift in excess of that $18,000 per year to any particular person, then you're not using up that $13.61 million lifetime exemption amount, that you have available to you throughout the course of your life.
But that may change.
It almost certainly will change. And so everything that I'm talking about, the basic structure of what I'm talking about likely will not change. However, the numbers will. So as probably a lot of our listeners know and have heard, at the end of 2025, the current tax code is set to sunset. And it will go back to what it was prior to the Trump tax cuts in 2017. And lots of things will change, and one of the most notable changes will be, in fact, that figure. And so nobody knows exactly what that number is going to reset to in terms of that lifetime exemption amount, because from what we've heard, it's set to go back to what it was, but it's going to be adjusted for inflation. So the figure that I saw, Joe, was about $6 million.
Right. And now the annual gift amount may not change. In other words, the $18,000, that may increase because it has been over time. But the exclusion amount that you're talking about, the exemption amount, where you can give up to $13 million and not incur gift tax, if they change the tax law, that will definitely change.
Yes, exactly. Yeah, I think it's, almost every year it seems like that annual amount goes up.
Right.
I think it was 17 last year, it's 18 this year,
Right.
so it's a good point.
Right.
It probably will increase.
But you're talking about non-deductible gifts. Now, there are deductible gifts.
There certainly are. So, unfortunately, gifts to friends and family members are not tax deductible. They may feel charitable from your
Right.
perspective, but they are not tax deductible. So a gift to, for example, a qualified charity, a 501c3, is potentially a tax deductible gift. Now, there's all sorts of rules and limitations on that as well. Joe, as you know, I'm doing a workshop here at 10 o'clock this morning, and one of the subjects we're going to cover is qualified charitable distributions. And, Joe, you and I deal with this stuff every day, and I think sometimes we probably take for granted that people know these things or that they're aware of these things. So I thought I'd bring up this qualified charitable distribution topic again, because I find that, at least half of the time when I bring this up, people are not aware of it. And what it means is when you reach age 70 and a half, so remember 70 and a half used to be the required minimum distribution age.
Right.
Now, it always was the qualified charitable distribution age, and it still is. So once you reach that age, you can take up to $100,000 from your IRA and donate that directly to a charity and have that donation come right off the top. So, right now, what we know is that the standard deduction has gone up significantly. So in the last several years, people that may have been gifting to charities prior to that increase in the standard deduction were getting a tax deduction for making those charitable contributions. And now all of a sudden, since that standard deduction's gone up so much, they're not getting a tax benefit for doing it anymore. So this is a way around that. If you're of that age and you have an IRA, you can gift, let's say, $10,000, directly from your IRA to a charity, and that money will never be taxed. It goes straight to the charity.
And the benefits are. Oh, the other thing, you mentioned this, and I know you talked about in the workshop, and maybe you did mention it, that it has to go directly from the IRA to the charity. It cannot pass through your hot little fingers.
That's a good point. Yeah, exactly. And I think people are, probably somewhat familiar with that concept. It's kind of like when you take a rollover, something like that. You don't want to get the money. You want to send it directly to the end recipient. Kind of the same thing with this QCD. So, yeah. So for example, most of us work with Fidelity. If you have an IRA with Fidelity, you would want Fidelity to send that in my case, the $10,000 directly to the charity. You don't take the money and then write a check to the charity. Right. You have that money sent directly to them. Right. So I think that's probably, if somebody's at that age and, they're asking, Matt, what's the first thing I can do to save on taxes? That's the first place we're going to look, because, a lot of times what I'll find, Joe, is somebody may be giving, they might be writing a check and putting it in the basket every week at church, and maybe it, adds up to $5,000 or $6,000 at the end of the year, and yet they're sitting on this IRA. They're going to take a required minimum distribution. They're not getting any tax benefit for making that, putting the check or putting the envelope in the basket every week. So what we can do then is redirect those monies. It's not that you're giving any less. In fact, you're giving the same amount. And guess what? The church doesn't care whether you do it from your IRA or you do it in the envelope every week.
Right.
So that way, if we take it from the qualified charitable distribution, the QCD, we're guaranteeing that you're getting a tax benefit for that. Whereas if you're just putting an envelope in every week, you're hoping at the end of the year you might get a tax deduction for it, and you probably won't.
So these are the things you cover in the tax planning through the 4 stages of retirement.
Yes,
that
it is.
That you're doing this morning. You have a full house here coming into our learning center here this morning up at Altamont Springs. And we're going to move this show come November the 9th.
Yes.
Taking it on the road.
Yes, we are taking it on the road. We will be at Village on the Green over in Longwood, just about, maybe 5 minutes from the office here. Beautiful spot. And I don't know, maybe once or so a year we do one of these workshops on the road, as you say, Joe. And I don't know, for me it's fun just to kind of get out of the office and bring the word out to other audiences a little bit. So that'll be the same workshop as Joe mentioned, tax planning through the 4 stages of retirement.
So here's the beauty of this. We're going to do the show live from there at 9 o'clock. So if you'd like to come in and sit and be part of the live studio audience, you're welcome to do that. And following up with that, at 10 o'clock, you'll be doing your workshop, maybe 10:15, 10:30 because of being able to set up. And then the Village on the Green is going to host everybody for lunch. So if you'd like to come on by, see my new home, see where we're living, and see what it's all about and what the tax planning through the 4 stages of retirement is all about, we encourage you to circle that date on your calendar, November the 9th. I think our website still shows it that it'll be held here. But for our knowledgeable WDBO listeners, you now know the show is going to be moved to Village on the Green, November the 9th. We encourage you to come on out and see Matt and me. But you're talking about the 4 stages of retirement, and maybe we can touch that again coming back on the break, because a lot of people don't know about all these ins and outs, and they changed the ever-changing tax law.
They sure do.
Ever-changing tax law. So I hear the bumper music. Josh, take it away.
Thank you much, Matt Murphy, Joe Bert, Certified Financial Planners with the Certified Financial Group, taking your calls, answering your questions, guiding you to and through retirement here on the air, here on The Money. You are listening to On the Money. 844-580-9326 is the number to call. 844-580-WDBO. Send in your open mic using that free WDBO app. You're listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the 3rd or 4th generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a certified financial group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're a certified financial group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the 3rd or 4th generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a certified financial group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're a certified financial group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're a certified financial group, but we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't. Here on WDBO, AM 580, always streaming live inside your WDBO app. Certified financial planners in your pocket right now to answer any questions you may have about guiding you to and through those so much fun years. You know, once you get to retire, you want to make sure you're ready to retire and have the funds to maintain the lifestyle you want to maintain throughout retirement. And that's what they do at the Certified Financial Group. So pick up the phone right now, 844-580-9326, 844-580-WDBO. Send in your open mic using that free WDBO app. And the topic of today's show that Matt Murphy and Joe Bert are guiding us through is, of course, how to do some charitable contributions and some savvy tips while doing so.
Well, we're talking also about the tax planning through the 4 stages of retirement. One of those is the topic that you just touched on there, Josh, regarding giving in your retirement years. But you've got some other ideas there, Matt.
Yeah, and I think the basic premise, Joe, is that we go through our entire life while we're savers. So we'll 20s, 30s, 40s, 50s, we're saving money into 401ks, we're saving money into IRAs and other investment vehicles, and the tax. The items from a tax perspective that you need to pay attention to during that phase of your financial life, let's say, are completely different than the tax items you need to start paying attention to once you are near and in retirement. So, for example, if you've got kids, the child tax credit goes away. Once you're in retirement, you're not contributing to 401ks and IRAs anymore, so you're not getting tax benefits for that. Oftentimes, if you're fortunate enough, you've paid off a mortgage, maybe you're getting some tax benefits for paying the interest on your mortgage before, and so you're not getting that anymore. And then you have to start paying attention to two of the big ones, and these are items that I'm going to be covering in the workshop this morning and the one at Village on the Green on November the 9th. is how your Social Security is taxed and how your Medicare premiums are affected by your taxable income.
Yeah, it's a big surprise to a lot of people when they enter that first year and says, "Oh my gosh, how come I'm losing this? I'm paying that. I never realized that." And you have to factor that into your retirement planning, because if you don't, that's an expense. It's a tax. And if you don't factor that in, you think you're going to have all this money coming in. Social Security's will be coming in. I'll be paying in the minimum amount on Medicare, and I'm going to be in good shape. If you don't do some planning, you're in for a surprise.
I'll tell you an example, Joe. I had one of my clients before she came to me a few years back. The way it came about is, she said, "Gosh, my Social Security went way down. I thought Social Security got a cost of living adjustment each year." And we started digging into it, and she sent me all the letters that she got from Social Security Administration. And come to find out, her Social Security payment didn't go down. Her Medicare premium skyrocketed.
Right.
And what happened was 2 years prior, she's very charitably inclined. She gives a lot of money to her church and other charities. And she had never gotten the guidance that, and she's got a huge IRA. So she's taking her minimum distributions every year, but she's also donating to charity, getting no tax benefit for it. So what happened was she took a large RMD, in a particular year. And then 2 years later, come to find out, her Medicare premium skyrocketed. And that was an easy fix. Going back to what I said before, all we did is we gave the same amount to charities, except we donated it from her IRA in the form of a qualified charitable distribution instead of her just writing checks to these charities. And guess what? In 2 years, her Medicare premiums are going to go back to what they should be. And so she'll see that her Social Security actually does increase each year with the cost of living adjustment.
Right. And not only that, that impact, but doing a Roth conversion or the sale of a house or maybe some big transactions that you're doing is going to impact the taxation of your Social Security and your Medicare premiums. IRMA, we call it, right? IRMA,
yes. Not referring to the hurricane that blew through here a few years ago.
Right.
Income-related monthly adjustment amount. It's just a fancy acronym for what I would consider just to be a Medicare tax, Medicare premium tax.
Right. So you'll be covering all that this morning for the fortunate people that are coming by. We're going to see here in the next half hour or so. Once again, you'll be covering all that in more detail on November the 9th at Village on the Green. We look forward to seeing our listeners there. And I hear the bumper music. Josh, so take it away.
You got it. If you want to join the conversation, Joe Bert and Matt Murphy, certified financial planners with the Certified Financial Group, here to answer your questions live on the air. 844-580-9326, 844-580-WDBO, or you can send in your question using the open mic feature within the WDBO app. You're listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
I know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey, and these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, "Hey Lou, I need to, I'm barbecuing this weekend, right? What do you like?" And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, "Veal? Oh, I like veal. Well, what do you got on skirt steak?" "Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite. Marinated up a little bit. It's fantastic." Lou will never say to you, "Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon?" Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance. What should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have, that's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, but we're planning tomorrow, today.
As an
Back to On the Money here on WDBO 107.3 FM, AM 580, always streaming inside your WDBO app. Got a couple of certified financial planners, Joe Bert and Matt Murphy, with the Certified Financial Group, answering your questions, planting information inside your brain, information you need to get to and through retirement confidently. If you want to pick up the phone right now and dial 844-580-9326, you can get that info planted in your brain specific to your situation. 844-580-WDBO. Send in your question. If you want to use the open mic feature, you are more than welcome to do that as well. Open up that WDBO app, download it, or send in your open mic there in the bottom right-hand corner. We got Muggsy calling in, and Muggsy was listening to the episode last week following up a question about Social Security. Go ahead, Muggsy. You're on the air.
Good morning, Muggsy.
Hi, Joe and Matt. How we doing?
Good. Thanks for calling. I think we met down at the WDBO studios a year or so ago. We attended one of our workshops. Am I correct?
Yes, sir.
There you go.
Sir.
There you go.
And I appreciate answering our calls. So Josh was right. If I missed your radio show, I try to catch up later on a podcast when it's posted. And there was a woman named Joanne last week who called in about her Social Security benefit. And I kind of resonated with her because she's a lot like me. I am single. I was married for 31 years. And I just filed for Social Security last week. And then, maybe 2 weeks ago. And I'm filing for early. I turn 62 shortly, and they approved it this week. So when you go through the online application, they ask you all the questions, just like Charles said, and they evaluate which would be higher, your benefit or your ex-spouse's benefit. Well, half of it. And I was a government employee, so I got the WPO, windfall, the WEP, windfall elimination. I got the GPO, government pension offset, and they came back with a number. Here's my question. Sorry for all that. How do I know? How can I verify that what they told me is correct?
Well, that's one heck of a question. I'm not sure. I think in this case, unfortunately, you're at the mercy of whatever the government tells you. And I hate that as an answer, but I don't know an answer of how to change their numbers or to go back and test their numbers.
I don't either. Yeah.
Yeah.
Okay.
Yeah, I wish there was some way to plug in the facts that you know. As you probably know, your benefit is based on your highest 35 years of earnings, and then you have the offsets because of the government employment, and then you don't know what your ex earned, so you'd have to have all that information as well.
Exactly.
Yeah.
And I don't think they'll give you that information either, Muggsy, will they? Did you try?
No. Oh, yeah. And the whole reason I applied online is I went to the Port Orange office, which is, I went in person 3 times, and I was so discouraged by the service I got from them and the inability to answer questions and the total contradictory answers. I said, all right, I'm doing this online. Certainly the technology is better. And I thought, okay, yeah, this was easy. I got this. And I submitted it. And I thought they would give back 2 proposals, what mine was and what it would be if it was my ex-spouse, half of his.
Right.
But they never did that. They just said, this is
This
it.
is the number, behind the magic curtain, trust us.
Right.
And that unfortunately, I understand where you're coming from. You certainly like to know that the calculations have been done accurately and taking into consideration all the things, but we have no way of knowing. And, we know that the government does make mistakes. I don't have an answer for you. I wish I did. I've never been posed with that question, and we'll see if many of my colleagues have an answer for you. But I really don't. I really don't know. Yeah.
Okay.
And particularly in your case, because it's not straightforward that you've got the government offset information there as well that changes your benefit. Huh. Well, I wish I could help you, Muggsy.
We're stumped.
Thank you.
Okay.
You know what? You actually, even though you think you couldn't help me, you did, because I could go to sleep tonight knowing that I'm done, and I'll just take it when it comes. Thank you, guys.
You're welcome, Muggsy. And thanks for being a loyal listener. We greatly appreciate it.
Thank you.
Okay, Josh. I see we got some open mic questions that came in.
You got it again. You can send in your question using that free WDBO app, the open mic feature inside, just like a couple of listeners here.
Mike from Orlando. I have $90,000. I'm 63 years old. Is it too late to invest in an IRA? Thank you.
Sure. Well, the amount of money that you have is not the critical thing. It's, are you employed?
Yeah.
So you have to have earned income, and by earned income, we're not talking about interest, dividends, capital gains, but have earnings, whether it's self-employment income or W-2 income, and it's not too late, never too late to get a tax deduction, let that money grow for you. Now the question is, Roth or traditional?
Yeah, Roth or traditional, or for that matter, if Mike's thinking, what he can't do is he can't put that entire $90,000 into an IRA.
Yes. Yeah, I should have addressed that. I think that's where he's going.
Probably so.
Yeah.
So, Mike, if you're listening, you could do if you're over age 50, you could do this year up to $8,000 into an IRA, and like Joe said, if it's a traditional IRA, you'd get a tax deduction to making that contribution. If you put it into a Roth IRA, you put the same amount of money in, but it's either or. And you wouldn't get a tax deduction for it, but that money would grow tax-free for you. And depending on the rest of your financial situation, what your income is, and all of that would determine whether it's more appropriate to do the traditional IRA or the Roth IRA. So we'd kind of have to know a little bit more about your situation there. But yeah, you wouldn't be able to put the entire $90,000 in, but certainly to answer his question, it's not too late to contribute to an IRA.
Yeah, and if you're self-employed, you can get substantially more deductions by setting up some form of retirement plan for yourself, over and above a traditional IRA, over and above that $7,000 or $8,000 limitation.
Yeah,
so
you can do a SEP IRA or something like that.
Or it's a one-man 401k.
Yep, that's right.
Yep. So there are other options that are available to you, but you can't necessarily dump in the whole $90,000 into an IRA, but perhaps with some form of other retirement plan. So I hope that helps you out, Mike. Appreciate the open mic question. I see you got another one there, Josh.
You got it. If you want to call in, 844-580-9326. Or we do have Charles Curry standing by off the air to take the call live in the office if you want to get right to the source of the information at the Certified Financial Group. That number is 407-869-9800. 407-869-9800. Here is open mic number 2.
Good morning. I have a IRA consisting of about $1 million in Treasury bonds, 5%, split up into 7 segments. I'm considering taking one of those, which is about 150, out to go ahead and have for projects, which I'm working on this morning. Where do you suggest that I park that in the meantime? I don't want anything long term, so anything you could tell me would help out. Thank you.
Yeah, well, the good news is that right now interest rates are still higher than they were in recent years. You can get about 4 or 5% in a money market account. We can do that, right?
Yeah, I know the Fidelity money market right now is paying just under 5%. So that's liquid and available. Pretty safe. Obviously, the difference there, of course, between a money market and a Treasury or CD is if interest rates go down, those money market rates, just like any bank or savings accounts rates, would decrease with it. But if it's money that you're going to be using, I think you had mentioned for a project upcoming, you don't want to subject that to any risk, and you don't want to tie it up anymore. So probably something like a money market would be a good place to keep that money in the meantime.
So I hope that answers your question. Appreciate the open mic call. And I see we've got a text question floated in there as well, Josh.
You got it again. Call 844-580-9326 to hop on the air right now. Text question from Myra in Tampa. Myra wants to know, Myra would like to convert some of her IRA to a Roth, but my understanding is I'm limited to $7,000 per year. Is there a strategy for converting more to Roth each year?
We'll be talking about that here in about 10 minutes, as a matter of fact. This is another misconception. There's two ways to look at Roth IRAs. There's contributions and there's conversions. So in order to be eligible to make a contribution, and that's limited to $7,000 per year. If you're over 50, it's up to $8,000 per year. You have to meet certain income limitations. So you have to be under a certain income amount in order to be able to be eligible to make that Roth IRA contribution per year. But what it sounds like Myra's talking about here is a Roth conversion, and that's treated differently. So there is no income limitation, nor is there a dollar amount limitation per year on making Roth conversion. So Myra could take, in theory, I mean, she could be earning $1 million a year, and she could have $1 million IRA, and she could convert the entire million in one given year. Now she's going to pay taxes on that, but she would be eligible to do that and would not be limited by that $7,000 or $8,000 limitation per year.
But once again, when you start making those conversions, you want to be careful of how it impacts the taxation of your Social Security and your Medicare premium, because the mistake that we see people make, they jump in and get all enthused about converting it. And oftentimes that conversion in the long run is not necessarily in your best interest. I think the investment world, the people in the investment business have oversold the benefits of a Roth. In certain cases, they're great, but in many cases, they really create more problems than they are worth. So that's one man's opinion, but that's what we have. Okay. And I've got another open mic question there, Josh.
We do. Somebody sent in some financial advice for Muggsy. We can play that live on the air here after this break. If you want to send in your question using that open mic, download the WDBO app first. If you already have that, you're one step ahead of the game. And just open up the WDBO app. Down in the bottom right, you'll find a button that says open mic. Push record, send it in. Or you can call in live right now if you want to do a little bit of a back and forth with our experts with the Certified Financial Group. That number is 844-580-9326, 844-580-WDBO. And again, that open mic feature is always available. Charles Curry standing by off the air to answer your call live off the air in the office of Certified Financial Group. That number is 407-869-9800. 407-869-9800. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
Investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank, and there's Stevie, and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in, you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to, the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal, ooh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak, just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit, it's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
On the money here on WDBO, AM 580, always streaming live inside your WDBO app. Josh McCarthy sitting here with Joe Bert from the Certified Financial Group. Matt Murphy had to run. He's got some things going on here just in about 10 minutes, 5 minutes. He's doing great things there at Certified Financial Group. We got Michael calling in with a question for Joe. Go ahead, Mike. You're on the air.
Good morning, Michael. What's up?
Good morning. My wife worked for the United States Senate from 1980 to 85, and we've just learned that during that time, we're not contributing to Social Security.
Mm-hmm.
So that's hurting us now. Has that law been changed, or is there anything that can be done about that?
No, the law has not been changed. In fact, if you're listening, our earlier caller, Muggsy, has the same situation. When you work for the government and they're putting money aside in another kind of account that obviously she's not getting much benefit from, unfortunately, that's a circumstance. The law has not changed, at least not to my knowledge, Michael.
Well, that's what I needed to know. I thank you for taking my call.
Well, you're quite welcome. We appreciate your listening.
It's a good show, and thank you. Continue your fine work.
Thank you very much. Have a great weekend, Michael.
Thank you so much, Michael. Go ahead, Joe.
And we had another, app call, or what do you call them?
We do an
open mic.
That's right.
Yeah, somebody had perhaps a suggestion for Muggsy. Before we listen to it, though, one thing I didn't suggest, and this is a long shot, Muggsy, if you're still listening, you may want to contact your congressman and tell him or her your dilemma, and see if there is some way that you can get the Social Security Administration to show you the actual calculation that was done. That's probably your last recourse to be able to get. If you really want to take it to that next degree, I know Muggsy said she wants to be able to sleep at night, but this may be one more step that she may want to take.
Thank you much. And here is another answer, maybe a little bit of tidbit of advice for Muggsy as well. Muggsy's popular today. We got to get her on to co-host an episode one day.
There you go.
Here we go.
The way that you can know whether the half of the spouse's Social Security is from him or from you is every year you should have received a benefit statement from Social Security. I get it every single year, and it shows me how much I would get at 62, 63, and so on and so forth. And you can compare that against what they offered you. Very simple.
Yeah, you do get the statement, but Muggsy's situation was pretty much more complex because she did not know what her husband's earnings were and if that was calculated correctly. And then she has the offset because he was a federal government employee. So, yeah, you're correct. In fact, go to ssa.gov, and what you want to do is be sure that your company you're working for is paying into Social Security. Unfortunately, over the years, I have had folks walk into the office, not often, but I've seen it more than once, where they found out they're ready to retire and the company that they worked for many years ago was never paying into Social Security. And they thought they were, and therefore you lost all the benefit of those earnings. And then the former company is gone, the people are gone, and you're really stuck. So that's an unfortunate situation. I know we're up against the clock here, Josh. Let me mention a couple of things. Next, let's see, this is October the 2nd. Charles Curry will be hosting another one of our workshops. This is a Wednesday evening, 6:30 to 8 p.m. Social Security planning, the basic rules and claiming strategies. As we say, and as we talked about this morning, the government can only tell you what your options are. They will not tell you what is in your best interest in terms of claiming strategies, whether you're widowed, whether you're divorced, whether you want to collect at 62, at 67, age 70, all those things Charles will be covering. Once again, absolutely free, 6:30 to 8 o'clock here at our Learning Center in Altamont Springs. Go to our website. That's financialgroup.com. That's financialgroup.com. You can make your reservation right there. And I want to mention also, I don't do this often enough, that we have a couple of outposts, if you will, for folks that live in the area further from Altamont Springs, down in Windermere, and also in Daytona Beach. So if you want information, we offer no obligation visit. If you want to be sure you're on the right track for retirement and considering retirement planning or investment management, give us a shout. Go to our website, financialgroup.com. That's financialgroup.com. And Charles Curry is taking calls off the air right now at 407-869-9800, 407-869-9800.
You've just listened to On the Money, where we're helping you plan tomorrow
today
with the Certified Financial Group.
This is